morning, guys. Hello and welcome to Money Control's live stream. You're tuned into a fresh new edition of Opening Bell with me, Lovisha Darad. Well, the tariff news continue to flow today, and it's the midweek, and the US-India trade deal seems to be delayed. But yes, US President Donald Trump did announce that more announcements and trade deals with 7 countries would be announced by tonight. So we will watch out anything on this. But yes, 3 major updates coming in from the White House, where Donald Trump's tariff tantrums continue, him warning 10% tariffs on BRIC nations, which includes India too. And we have seen how Trump has been slamming BRICS, and he believes that the organization is set to weaken dollar. So the tariff threats come on the back of that. Followed by his also announced 50% tariffs on copper imports entering US. So as a result of which we saw copper futures trading with about 14 to 15% gains in New York. So now all the 3 base metals, copper, steel and aluminum, all of them have been attracting 50% tariffs. So we'll watch out how the metal stocks behave today. We'll also watch out pharma stocks, how they behave today, given that Trump has announced that he would give a year to pharma manufacturers before implementing tariffs that would go as high as 200%. So the likes of Dr. Reddy's, Aurobindo Pharma, all of these stocks would be in focus today. But yes, another subdued start. That is what the GIFT Nifty trends have been indicating, and that's what the pre-open rates have also been indicating. But yes, so we'll try to understand from our top 3 experts today the levels that we need to watch, what the tariff implications mean, and more as well. But we'll also be taking up your stock-related queries, so keep posting them, and we'll address them before 9:30 a.m. Let's quickly take a look at the top headlines, sir. Stocks in the Wall Street end flat as President Donald Trump offers no exception to the tariff deadline. The Dow Jones slip over 160 points, while the Nasdaq and S&P 500 were little changed at close. Asian markets started trade today on a cautious note as investors withheld themselves from taking risky bets after US President Donald Trump ruled out this August tariff deadline. Meanwhile, GIFT Nifty is indicating a marginally negative start for our own markets. Oil prices edged up to 2-week high amid forecasts for less US oil production, renewed Houthi attack on shipping on the Red Sea. Meanwhile, gold prices have slipped over 1% on strong US dollar and rising treasury yields. And in his cabinet meeting, President Donald Trump said all members of BRICS, including India, has to pay 10% additional tariffs. He also added that he plans to implement 50% tariff rate on copper, while also adding that he could offer pharma manufacturers at least a year before implementing 200% tariff on their foreign-made products. And even as we await India-US trade deal, Donald Trump said that he will make announcements related to at least 7 other countries later tonight. Sources told CNBC TV 18 that India trade negotiating team may visit to Washington to fine-tune some of the sticky points. All right, we did see some, steady session yesterday, given that in the last 30 minutes or so, we saw a little bit of a rally that came into the markets, and we saw Nifty also hitting above that 25,500 mark as well. But yes, before we understand, how the markets are going to behave today, we have a special global voice which will be joining us. Peter Cardillo, Chief Market Economist at Spartan Capital Securities, will be joining us right now to understand, what the tariff deal announcements have been as far as now. Peter, good morning. Tariff deals have been announced for several countries, but India negotiations continue to drag at this point of time. And now as Trump is quite insistent on 10% tariffs for anyone in BRICS, how do you see all of these tariff narrative unfolding for the markets?
Well, I think, that eventually when an Indian deal is announced and other BRIC members, probably that's going to be watered down. I don't think that the extra 10% that President Trump is talking about will actually be imposed. These tariffs are pretty hefty, and Trump and other countries know that if these tariffs go into effect at levels that that Trump is talking about presently, that is going to cause pain in the global economy. Certainly, higher inflation here in the States. That means less uh, less economic activity, recession, et cetera, et cetera. And that's not only for the United States, but on a global basis. So I kind of think at the very end, yes, there's talk about it. Yes, he continues to threaten nations with higher tariffs. But I think if you look at the um, market action, the market is basically betting against what Mr. Trump is planning to do. I think he will compromise. I think that the final deals will have compromise. Of course, it could go into effect, and then maybe a week or 2 weeks later, um, you know, deals um, would be reconsidered and rewritten to levels that would not be as detrimental as the hefty tariffs that are being discussed today implemented.
Okay, okay. Peter, from an equity market perspective, do you believe all of these news repercussions are already reflecting in the price now that the deadline has also shifted to August?
Well, in certain prices, yes, and others, no. It depends what you're referring to. The markets are markets. If you look at prices, that's what the market is suggesting, that a certain product or a certain commodity is valued at. But that's subject to rapid change.
Okay. Peter, and what about the Trump's tax bill? There was some worries on the off-tariff related inflation in the US. How do you expect the Fed to approach this year with respect to rate cuts?
Well, I think the Fed is going to continue to stay on a very cautious path. I don't, obviously, um, the Fed's thinking is that differs from what Mr. Trump is thinking. Um, he's suggesting that rates should be much lower, but the Fed is not denying the fact that inflation has improved, and probably that rates would be lower if it wasn't for the uh, future impact of the tariffs. So it's a question of waiting to see where these tariffs will hit in terms of inflation, and if the Fed feel comfortable that perhaps maybe the inflation aspect of it is not going to be as detrimental as maybe the markets are fearing, or the perception, I should say, of hefty tariffs, then they will lower rates according to the inflation status and, of course, economic conditions.
Okay, okay. How do you view the Trump's pharma tariff proposal? It's once again back, and he's threatened as tariffs which is as high as 2,200%. Now that given India's significant exposure to the US market in terms of generics, what kind of impact can we expect this time around?
Well, there's no question there's a lot of exposure, whether or not it's going to happen, I'm not sure. But of course, look, it's all about one thing right now, and that's the fear factor of the unknown.
That's right. That's right. Peter, I know it's quite unknown at this point of time, but we also have some, earnings season which will be starting tomorrow. Any expectations you are having as India as an EM play, and how are you finding valuations with respect to that?
Could you kindly repeat that? I didn't get that question.
I know we have the Q1 earnings season which will be starting tomorrow onwards. Anything that you're watching out for India as an EM play, and how are you finding the valuations with respect to that?
Well, it's hard to say in terms of the market um, right now. It's in a wait and see mode, and of course, the next big event is the earnings season, and that should prove to be positive in terms of the fundamentals. And of course, the open question that everyone wants to be resolved is the impacts of tariffs and the imposition at what levels.
Okay, okay, all right. All right, with that, we have to let you go, Peter, but it was great having you join us.
Thank you for having me.
All right. All right, let's take a quick check of the markets. The first trades coming on your screen where we have opened once again in the negative territory. Sensex down about 100 points. Nifty also has slipped below that 25,500 mark, so to speak. Yesterday, we did see in the last 45 minutes or so that Nifty did reclaim that 25,500 odd levels, but right now it's testing those levels at this point of time. We did, like we were talking about earlier today, the US-India trade deal that seems to have been delayed. Sources, reports and all do suggest us that Trump would be suggesting that there will be 7 more countries and 7 more trade deals which will be announced tonight. But yes, we will be watching out more on that. But yes, once again, a choppy start for our own markets today. If you look at from a sectoral perspective, yesterday financial stocks were the ones that contributed to Nifty's rally. But if you look at the Bank Nifty index, it has cooled off with about 0.1% cut that is coming in. If you look at the Nifty IT index ahead of its Q1 results, TCS reporting Q1 numbers tomorrow, it's seeing a bit of a sideways trade with about 0.5% cut coming in. Pharma index, however, despite the 200% tariff threat that the US president has announced, it's still mildly in the green. So brushing aside any kind of fears at this point of time. If you look at consumer durables, media and other stocks, these seem to be doing and holding up well, but however very mild gains as of now that we are seeing. Nifty Realty Index extending with about 0.5% cut coming in for the Nifty Realty. Nifty FMCG after yesterday's cool off seems to be doing well with about 0.2% gains coming in for the Nifty FMCG. If you look at the broader end of the market, small caps and mid caps, both of them exhibiting mixed trends. However, with mild set of gains that is coming in for the Nifty small cap index. Now let's take a look at some of the large cap gainers and losers at this point of time. The top gainer, HUL, with about 1% gains. Given that FMCG stocks once again have been buoyant today. Shriram Finance with about 0.7% gains coming in. Asian Paints with about 0.5% gain. Geo Financial and Cipla are the other top Nifty 50 gainers. If you look at on the way down, on the contrary, and on the flip side, if you look at HCL Tech seeing a cut of about 0.5%, Tata Steel seeing a cut of about 0.6% after it displayed its Q1 business update. L&T seeing a cut of about 0.5% or so. ICICI Bank and JSW Steel are some of the other top losers on the Nifty 50 today. But on that note, let's quickly get on board with Sudeep Shah, Head of Technical and Derivative Research of SBI Securities, joining us. Sudeep, good morning. How does the market look like? So far this week we have had a quiet session, and today also it's been choppy.
Good morning. Today also it is choppy, and last several sessions now we are being subjected to this 200-250 point range. Actually, if you see last 5-6 sessions, Nifty is not doing anything, trading just between 25,350, 25,400 and 25,600 on the upside. So within this 200-250 point range, it is a lot of. If you see, there are sectors moving also in between, but not seeing a lot of action, so to say. So I guess markets are waiting for a trigger, maybe from the trade deal or some kind of the impact that we have seen in the last few days, the SEBI action regarding the option trading and everything. So my sense is that it would still take some days to see some kind of a momentum coming back into this market. And overall, what we feel is 25,300, 25,400 zone, this 100 point range will act as an important support, and this could set up a base here. So it is okay if we are not moving higher, but till the time we are still holding 25,300, 25,400 mark, there are chances of a decent pullback in the coming few sessions. Maybe another couple of trading sessions, we would see a range bound trade. But post that, we see that the markets are headed up to 25,700, 25,800 in the coming few sessions.
Okay, all right. What about the Nifty IT index, Sudeep? How does it look like? We have TCS which will be reporting its Q1 numbers today. Anything that you're watching out from the IT space?
See, Nifty IT, if we see since say 12th of June, the IT index is virtually at the same level, 38,500, 38,700 plus minus 300, 400 points. So virtually the index is just trading in a 1.5, 2% range since last 20, 25 sessions. And what we feel is overall the setup is still better. It's just the consolidation that is happening. And 38, 400, 38, 300 zone will act as an important support, and we might see a pullback on the upside up to 39,500, 40,000 in the coming few sessions, and maybe TCS results could act as an important trigger for that. If you see the TCS stock per se, the stock is not doing anything great. In fact, there is some kind of a sideways consolidation that is going in this stock, and I feel 34.50, 34.70 is that zone above which the stock needs to cross and sustain for it to see some kind of a short covering move on the upside up to 36.50, 3700.
Okay, all right. Let's take some viewer queries that has been dropping on our screen right now. Pooja Khanna, she's asking that she's been holding Varun Beverages at an average price of about 480 rupees. She's asking whether she can add more. 480 rupees, she's seeing a bit of a loss at this point of time, Sudeep. If you look at past 1 month, the stock has cooled off, and if you look at from a year-to-date perspective also, the stocks has been exhibiting a negative trend. What can we expect from a near-term perspective?
Uh, See, I feel Varun Beverages right now is at an important point. We're seeing some kind of a revival from lower levels. Last 15, 16 sessions, the stock is trying to create a base somewhere closer to 445, 455 zone. And yes, if she wants to average, she can do it, but keep a stop loss of 450. On the upside, the first levels that we feel could come is 483, 487. And once this is crossed, then 500 are the next levels to watch out for.
Okay, 500 levels to watch out for. Let's take one stock in focus, Tata Steel, because it did come out with its Q1 business update. We did see that the India crude steel production that remained flat at about 5.2 million tons, while the delivery volumes that fell to about nearly 4% on a year-on-year basis. For the company, we saw that during the quarter there was maintenance related shutdowns in the Jamshedpur facility as well as NINL, and that has led to decline in some of the finished good products. But yes, that is what we're coming in for Tata Steel, and of course the stock is also not reacting well to that news with about 1% cut, so to say. And so far this year also, however, the stock is up 18% despite the negative trend today. Sudeep, anything that you're watching out for Tata Steel going ahead, given its muted Q1 update that we saw today?
See, I feel Tata Steel could trade within a range between 165 and 150 on the downside. Every time this stock comes to this zone of 165, 163 zone, there is some kind of a selling pressure of profit booking from higher levels that creeps in. So unless and until we see this zone of 165 getting cleared on a closing basis, or this resistance to cross on a closing basis, we feel that the stock could still continue to trade in a range between 150 and 165 on the upside, and there could be some profit booking or some kind of sideways consolidation, say a lackluster trading momentum to be witnessed in this stock.
Okay, lackluster movement could be expected in this stock for Tata Steel. Let's take another viewer query at this note. Satya is asking that he's been holding IRB infrastructure since a few months at the price of 45 rupees. He's asking what are the short to medium term to long term levels for the counter. The stock is trading near to his levels, about 49 levels, that is where it is at. Sudeep, anything that we can watch out for the counter from a near term perspective?
See, I feel this stock is again into a declining momentum as well as in a consolidatory mode. So, across above 52 is required. 200-day moving average also is placed around 52. And what we've seen that even in the second week of June, it has briefly, mildly crossed over, but once again there was a throwback, and the stock once again started to cool off below the 200-day moving average. Hence, this level of 51, 52 becomes all the more important. The stock has to close above this for a day or two, and then we can see a move up to 56, 58 levels on the upside. So 51.5, 52 is the most important level which one needs to watch out here.
All right. Let's take one more viewer query. We have Union Bank. Satya is asking that he's been holding it at a buy price of 120 rupees. We did see that the company report its Q1 provisional update yesterday. The bank posted a 5% year-on-year rise in total deposits in Q1, and total deposits also rose about 3.6% on a year-on-year basis. But if you look at from a stock perspective, the street is not impressed with those numbers, and we can see a 3% cut coming in for the counter. And from the past month, also the stock has entered a consolidation zone. What can we expect, Sudeep? Further downtrend?
Not exactly, because if you see 140, 141 is important support for this stock. Last time also, mid-June, the stock had rebounded from this level back to 155. Although the provisional numbers, the updates that have come, they are not that great. But I guess the stock has already corrected from 155 up to 140 to 143 levels in the last 4-5 sessions, anticipating this, and as well as the market sideways momentum. So I feel these are the levels, and say dips to 138, 137 could be good levels to re-enter the stock. And overall, PSU stocks, PSU banking stocks could do well in the coming few months. So this could be the time to just keep on silently accumulating this stock rather than chasing the momentum once the stock starts reversing.
Okay, all right. Let's take another viewer query on that note. Deepu has been asking the view on Lupin from a near-term perspective. If you look at so far this year, the stock has been quite choppy, Sudeep. Anything that you're watching out for from a target perspective, and of course from the entire pharma basket also, given that some tariff announcements have been made overnight?
See, Lupin also on the weekly charts, if you see right from February, it is trading between this 1900 and 2100 mark. And every time it is coming towards this 1880, 1900 mark, there is some kind of a support from lower levels that creeps in. So, despite all these announcements related to the tariff from US President, so we're not seeing any major meaningful downside cuts into the pharma names. So I feel a lot of them would already been discounted earlier in January, December, January, when the first round of discussions regarding the pharma had crept up regarding this tariff being imposed on the pharma stocks worldwide. So I guess a lot of things would already have been discounted. It is just the reiteration of the same that he has done yesterday, and that is the reason I feel the pharma stocks are not reacting that negatively, which was widely expected. And overall, from a Lupin's perspective, I feel 1900, 1910 zone will be an important support zone. Although the stock is doing nothing right now, but zones closer to this 1920, 1910 should be used to accumulate and keep a stop loss of 1870 on the downside.
Okay, 1870 on the downside for the support levels for Lupin. Let's take another viewer query then. Paddy is asking whether he can invest in Amara Raja batteries for the long term, say from a perspective of 3 years or so. If you look at from the near term perspective, Amara Raja has not done quite well from a one year perspective, 1 month perspective, Sudeep. And so far this year also the stock has remained subdued. What can we expect for the next, near term?
Yeah, I feel instead of Amara Raja, he can say invest in Exide. The chart is still a bit better than that. And if this battery space is the only space, then I feel the returns may not be that attractive, or he might not get that returns what he's expecting. So he should be, say, he should be parking his funds, or see to that there are at least two to three stocks from the auto ancillary space that he is investing in, so that there is a decent bit of diversification that plays out, and one stock may not just say uh, uh, have an impact on the overall returns.
Okay, all right. Let's take another viewer query then on that note. Deepu Jain is asking the view on NTPC. NTPC, if you look at from April onwards, the stock has been on an uptrend. Sudeep, can we expect an outperformance going ahead?
Yeah, absolutely. It is just that the PSU stocks have gone into a sideways consolidation since last 5-6 months, and that is the reason this stock is not doing anything major. But it has not done even any negative. It has not given any negative surprises on the downside. So last few weeks we are seeing a strong base being built somewhere closer to 330, 340 zone, And overall, we feel that on crossing 350 on the upside, where the 200-day moving average is placed, the stock could decently move up to 375, 380 on the upside, maybe back to the closer highs. And that would mean that a lot of PSU stocks would start rebounding, and there could be a PSU backed rally also once these levels on a lot of stocks get triggered. So at least the downside is capped here, and we feel that 335 zone.
Okay, all right. There's some technical snag which is coming in there. But let's take a quick check of the markets at this point of time. How the Sensex and Nifty has been holding up, because we did start in the negative territory. Sensex has been down about 180 points, and Nifty has also slipped below that 25,500 mark. But yes, Sudeep, once again back with us. Sudeep, you were saying something about NTPC.
No, what I was saying is that 330, 335 zone is acting up as a strong base. And till the time this zone is held, we could expect a pullback, say up to 375, 380. It's just that 349, 351 zone in between, which there is a resistance, needs to get crossed, which is the 200-day moving average. So a base being set, 350, an important trigger point for a breakout, and above that, 375, 380 could be witnessed.
Okay, 370, 375, that could be witnessed for NTPC. Let's take another viewer query. Panu Anil is asking on BSE and of course all the capital market stocks that has been, trending downwards, and, it's not been doing well given the Jane Street action that we saw by the SEBI. But yes, BSE, any levels that we need to watch out for, Sudeep?
I would wait for say a fresh investment into BSC. If you're holding, keep holding with a stop loss of 2430, 2450 on the downside. But from a fresh perspective, a lot of things are developing on these, say, news related to Jane Street or any other option trading mechanism, or any kind of curbs, or any kind of, say, some kind of a new rules being set. So until and unless there is a decent clarity on this, we may see these stocks say trade in a range. Having said that, these stocks have seen a phenomenal return. So going into a period of consolidation will not be that kind of a icebreaker. So I feel overall there is a big possibility that even if there is not a bigger cut, the stocks, these capital market stocks, go into a period of consolidation, just digest all these incoming news which comes, and then once that is done, we see a fresh move on these names.
All right, that is the view coming in for the capital market stocks. Let's move on to another viewer query at this point. Advait Joshi is asking the view for Electra Green Tech for the long term. Electra, if you look at the charts, so far this year the stock has been quite subdued, and in the past 1 month also, the stock has not been performing well. What can we expect from the near-term levels perspective, Sudeep? Can we expect an underperformance going ahead?
Absolutely. I feel the stock till the time it's not crossing and closing above 1300, 1350 zone, would continue to underperform. We might see brief short covering moves here and there, but until and unless this major resistance is not crossed, there are chances that we hit levels of, say, 1050, 1000 on the downside. So the downside here is not ruled out. I feel one should just wait and watch before doing any meaningful fresh investment here in this counter.
Okay, all right. Wait until fresh investment. That is a view coming in for the counter. Let's take another viewer query at this point of time. Nitin Shahji is asking about Himadri Specialty Chemicals. The stock seems to be doing well in today's trading session. In the past 1 month, the stock has done fairly well if you look at from the June lows or so. But yes, what can we expect from a near-term levels perspective, Sudeep, for its HSCL?
See, I feel HSCL right now, there's some kind of a rounding bottom pattern happening here, and the stock looks good. A stable base is being set. So overall, 470, 475 zone will act as an important support. Until this holds, we see a move closer to 540, 550 on the upside here.
Okay, all right. Let's take another viewer query then at this point of time. Satvika Ranganathan is asking about Accum's drugs, and she's asking what the near-term levels perspective could be for the counter. Accum's drugs, if we look at from a 1 month perspective, the stock is fairly flat given the rally it has been seeing. It's consolidating at this point of time after the June breakout that the stock saw. But from a near-term levels perspective, anything that we can watch out for the counter, Accum's drugs?
See here, I guess the stock, not too much data is here. It's just less than a year of trading that this counter is showing. So overall, what we feel is since then the stock has been in a downtrend. 600 630 zone will act as an important resistance on the upside for marking it to be the first level of resistance, which maybe get crossed. So 600 630 zone will be a very important zone, I guess. For the stock to close and then for us to see whether we see a stable reversal here or not.
Okay, all right. All right, Sudeep, just one last question before we let you go. Anything that you're finding interesting in this market ahead of the Q1 earnings season before it begins to?
See, there are, say, a few stocks which are coming up on the radar, and one of them is Dixon. 15,700, 15,750 is where it is trading right now. This a strong, stable base is being formed here. So overall, we feel that till 15,300 holds, the stock could do 16,500, 16,700 on the upside. Uh, Another stock which is there on our radar is Cummins India. Here also there post a consolidation. So till the time 3430 holds, the stock could do well and move up to 3600, 3650 on the upside.
All right, those are the stocks that we need to watch out for. But with that, we have to let you go. Sudeep, thank you so much for your time and joining us.
Thank you. Thank you so much.
All right, let's take a quick check of the markets. The subdued session continues today also, given that we have, less triggers to watch out for. And of course, the Trump's tariff announcements that has been made overnight in terms of pharma-related news. The pharma index continues to brush aside, and it is trading with positive gains of about 0.3% gains that is coming in for the Nifty Pharma Index. Some of the other indices that seems to be doing well also includes the likes of Nifty Auto Index with about 0.1% gains, Nifty Media Index holding up well, Nifty FMCG after yesterday's cool off like I was mentioning, 0.3% gains that is coming in for the FMCG index too. Consumer durables, however, they seem to be shining in today's subdued session and they seems to be bucking the trend. However, the Bank Nifty that continues to witness a little bit of a cool down after yesterday's good rally with about 0.2% cut coming in for the Nifty Bank Index. Small cap and mid caps, however, seeing a little bit of gains. Small caps particularly outperforming the benchmarks with about 0.5% gains that is coming in. So yes, so all in all, a subdued session once again, a quiet session once again that is there for the markets today. But yes, let's on that note, let's quickly move on to our next guest of the show. We have Aishvarya Dadheech, founder and CIO of Fident Asset Management, joining us. Aishvarya, how are you looking at the markets now that there is trade deal uncertainty which continues to prevail, and we'll be starting off with the earnings season soon?
Good morning, Lovisha, and good morning to all the viewers. I believe US government is still in action. White House is active, and we are seeing slew of news coming out from that. And one of them obviously has been on copper, and then we saw with pharma after hearing the mostly the same rate what came out for almost those 14 odd countries. So I believe going ahead, we will continue to see this news hitting the market. But what is really important for us to understand that most of this news are more or less discounted, right? Even when he spoke about putting up to almost kind of a 200% tariff on pharma, to me it sounded more like more of a like a bark than a bite. We understand that the importance of pharma, the shortages over there, it's not pretty easy. That's why he came out and said that possibly he will give at least a year and a half to adjust to that. I think we are very close to putting some later coming out for India. I think the negotiations are happening, but I'm not really seeing too much of pressure on account of this coming onto the Indian market. The worst has always been factored. Market doesn't react to the same thing again. If we put out a better deal, of this whole, discussion which is going on. Possibly it will be breather for the market, and market can see more higher number in coming months. And as you mentioned, the second part to the equation is obviously we started this earnings season, especially from today and tomorrow. Tomorrow TCS will report number, and would like to say that the expectations when we enter this quarters are pretty low. Right. So obviously, when you're looking at the growth for Nifty for the next 2 years, we have the street is almost at 12%, 13%. But that number will be more backloaded, not front. So possibly the number that we expect for this quarters would be low single digit, across large cap and small cap. Mid cap can surprise on a slightly higher number of low double digit growth on PAT side. But overall, the expectations are very muted. So any surprise on positivity would provide much more impetus to the market. And that's why, Louis, if you look at the way where the fear gauge index is staying at almost 12.2 levels, it tells a lot about markets hungry for cues and takes the call from here onwards.
Okay. Aishwarya, once again we have Trump announcing 200% tariffs on pharma, which could be implemented in a year or so. But we'll watch out whether or not the political, spectrum also develops on that field. But Aishwarya, anything that you are expecting from the pharma stocks on that front? Because it seems today that they're brushing us out this news at this point of time.
Yeah, so even if you see in the US market yesterday when this news came, we did see much of the impact on the pharma stocks over there. And what we have to understand is the quantum of trade India does with pharma in US is pretty I would say small in that parameter. So like on a monthly basis, India exports to US pharma ranges between 800 million to 900 million, roughly a ballpark figure of $1 billion. And if we put it to the yearly number, it is close to 10 to 11 billion dollars. And the kind of import that we do from US on pharma space is not even $1 billion. So first of all, the reciprocal thing I think will not be a point of worry for the Indian pharma player. On second thing is the import tariff from US on pharma is very low. Absolutely, it's like 5% or 10%. 50% of the import that we get from US is almost exempted. So like if you play that negotiation deal, I think pharma as a space will be much better off. And if you see the presence across on this 10 billion of kind of $11 billion of revenue that we get from US pharma, majority of them are in generics. And that is one area obviously which is seeing pricing pressure, and that will be very unlikely to see any kind of a tariff hike given the state in which US is sitting up right now. Obviously, Indian pharma will try to see and move more into complex generics, biologics, biosimilar, or GLP-1 and things like that. But I would believe, pharma is sweetly placed, at least from the tariff perspective. The clear indication of 1.5 years is that they are not prepared, right? And India and the overall space of thing is not that big. And I believe they need to have that continuity, the supply side. So I believe Indian pharma or as an index, as the many of these companies should do well. And that's why obviously we are very positive, more from pharma rather than we are positive on CDMO space. The way things are happening on biosimilar, the opportunity GLP-1 provides to the market. I believe it's a very interesting opportunity. And that's why very much orbit in these names in a portfolio.
Okay. So you're mentioning that pharma is in a sweet spot, but we also saw that he imposed about 50% import tariffs on copper. So the copper prices have spiked up in New York. The futures have been trading like with about 14 to 15% gains. What does it mean for India in terms of EV perspective and of course the EV rollout perspective, given that copper futures, copper prices have also gained, and there is the crisis of rare earth magnets also prevailing for India. So anything that you're expecting, any kind of impact are you expecting overall?
So obviously, what this tariff does, there's being uncertainty and volatility. We saw one of the sharpest movement in copper prices over last maybe 40, 50 years. Uh, I think the direct impact is basically felt by wires and cable companies, where the raw material is almost 30 to 40% of their total requirement. And most of these companies keeps almost a month and a half of inventory. But what I understand is that most of this will be passed on, though that's why we are seeing not a very sharp reaction to many of these wires and cable company today. Second segment, obviously, like you mentioned about, will be or into air conditioning. So copper is used. Then there are a lot of this capital goods area where they have this influence, especially in the transformer side. But the element of that raw material cost as copper is pretty small. Beneficiaries are just players like Hindustan Copper and to an extent Vedanta, which I don't believe are really getting big out of this. What is really important for us to understand, as you said about the EV space, I think again the element of copper is not very high from that perspective. What is really important for me to understand that this is one policy they have decided today. It might happen that we have seen in the last 4 5 months that there's a lot of U-turns which they normally take happens, and this announcement take a derailment. If that happens, possibly copper prices will see that coming back to where it was, and the overall journey on EV, or whether it is rare earth mineral or possibly the other segment of whether it is wire and cables, will not see much of an impact. That is the reason I tell you we are not seeing very sharp movement in many of those stocks which are exposed to copper price volatility as we open the Indian market today. So there is always this thing that there will be kind of an some settlement, because it's kind of used as an area to negotiate more than anything else. And obviously we have that pricing power over there. So I think overall it's not going to be a very big negative.
Okay, okay. Aishwarya, you mentioned that, this time around this quarter, you're expecting low single-digit growth from India Inc. in this quarter. But from a sectoral perspective, anything that you're betting on ahead of the Q1 results? The street has been quite bullish on FMCG. But what is your perspective?
Yeah, so if we look at the kind of growth that we will witness, at least for this quarter, I think it will be pretty lopsided. If I see some of the sectors which are expected to do well are metals, cement, and primarily oil and gas, with some stability from BFSI. Obviously, FMCG is the area which is getting a lot of eyeballs, because we are seeing continuously good announcement from Cardillo consumers, likes of Daburs and Maricos. And we've been hearing for the last 3 4 quarters the rural economy is doing well, the stability is there, the growth part is there. So the rotation of capital is happening to FMCG from the likes of BFSI or IT, at least in the last week, one or so, that we have witnessed. But at least for this quarter, we are not going to see much of FMCG's result fanfare. The growth would be in low, I would say single digit, 2 to 3%. Possibly there will be more of a margin erosion which will happen. So this quarter, we will not see the best of the story, but at least for the H2 part is where I believe FMCG growth will start picking up. And on add to that what the kind of tax saving that will also provide a much needed impetus to the growth. So we believe FMCG's time is back. We believe that this growth will be visible once we see some more tailwind coming on the urban side of the story. But not much of expectation, at least for this quarter. This quarter, it will be all about cement, metals, oil and gas, and to an extent banking. Sectors like pharma or IT, possibly, or more of an export-oriented story, will continue to report muted numbers. No fireworks expected there. Coming on the sectors, as we said, we are very positive on pharma, we are very positive on chemicals, CDMO as a space, NBFC particularly, and some of the discretionary space on the FMCG side.
Okay, okay. You mentioned that you're underweight on the IT sector, but has your view a little altered after the Trump's tax bill was passed in US? Do you believe that, from a 1 to 2 year perspective, IT sector could see some revival going here?
No, so I said IT will possibly not do great this quarter, but we continue to remain overweight on IT. And we believe that IT is going through its sweet spot of, we are obviously seeing kind of some toughness in the growth part. But if you look at the deal pipeline across both large and mid-size, we have believed that, that growth is expected to revive in second half of this financial year. And on top of this, what the bill, this beautiful bill which has been there, I believe the whole story of US going to get into recession is possibly back-ended. And with all this volatility around, I believe IT most likely will remain a safe haven. So when the growth comes around in this space, we believe IT should do well. So that's why we are allocating more capital to IT. And even in this quarter, there might be large cap which will not perform too much of the street expectations, but mid and small cap will continue to see better growth. So large cap can do 1 or 2% growth quarter on quarter, but mid and small cap companies can do between 3% to 5 6% growth, and there will be more of a margin tailwind. So I think there will be money allocation or rotation of capital which will happen to IT during this quarter or post this quarterly results, we are trying to play this trend and going over it right now.
Okay, all right. All right, with that, we have to let you go, Aishwarya, but thank you so much for your time and we hope that we connect with you soon.
Thank you, Lovisha. Thank you for being here.
Okay. All right, let's take a quick check of the markets. The subdued session and the choppy session continues for the benchmark indices. Sensex down about 150 points, Nifty below that 25,500 mark at this point of time. Advanced decline, if you look at the market breadth, however, seems to be in the positive territory because the advances have taken an upper hand. If you look at some of the sectors which has been contributing to the Nifty's up move, that is your Nifty Auto Index, Nifty Media Index is doing well, Nifty Pharma Index despite the tariff news has been doing well. Broader end of the markets, the breadth of the markets also seems to be on the positive side because if you look at the mid-cap and small-cap indices, both of them have been outperforming the benchmark indices at this point of time. India WIX, from a volatility perspective, that has eased by another 3% below that 12-odd levels. It is trading about like 11.8, so to speak. So yes, we could watch out for the second half for any improvement or any breadth recovery for the markets in the second half of the session. But for now, we have come to an end of this edition of the Opening Bell. Don't forget to tune in at 3:30 p.m. for closing, and we will be discussing about how the market is developed and what the stocks were in focus. Until then, signing off.